Please welcome Dr. Michael Miller.
I was trying to come up with a good description of what we expect in 2011, what the year will be like, and the best I could come up with was ho-hum. And what I mean by that is, it's going to be an okay year. The economy is going to grow, but it's not going to grow quickly enough to make any difference, to restore confidence in producers and households and so forth. There will be jobs. Jobs will be created, maybe several 100,000 a month, but it will be insufficient to put a dent truly in the unemployment rate. Because sitting on the sidelines yet are many, many millions of people. In terms of housing, it's going to improve, but it's still wait till next year, until there's anything that's really useful in terms of changing people's wealth position. Retail sales, they're going to rise, some, because households are still trying to pay down existing debt situations, and they're still concerned about their jobs. And when that occurs, retail sales are muted. This all tells us that commercial real estate will have an okay year. Things they'll improve, but they will not be great. They'll be modest. I can see beyond question that the banks are sitting, a graph which I've never seen before, banks are sitting on almost $1 trillion of excess reserves. It's partly because the Federal Reserve is paying them interest on excess reserves. That they never used to do. The economy is sitting at some historically low interest rates. And with QE2, the whole point of QE2 is, since they've run out of ammunition with short-term rates, it's to bring long-term rates down. That's why they're buying long-term treasuries, to bring that rate down. There's no indication that the Fed is going to stop what it just started. So we expect that this will probably continue through the first half of this year to keep long-term rates down. Now, looking at it purely as an economist, it isn't that lending cannot occur. It's that nobody wants it to occur.
So I'm going to start with Drew Neiman. Talk a little bit about the office market's size and shape and what you see in these first couple of slides.
The good news is that this fourth quarter of 2010 showed some very good signs in the suburbs of positive net absorption. We look at the downtown market as just negative, which I think a year ago was $1.5 million negative.
Great, thanks. First of all, Bill Rolando, principal of the John Buck Company. And then second of all, we kind of just made some assumptions on where would absorption be. Drew had absorption being really right at about negative to zero really for the year in 2010. We showed a slight positive. Some of it is just recording of about 300,000 square feet downtown.
Good morning. I'm Keith Stauber, Regional Managing Director for Jones Lang LaSalle. Investment sales has really come on, I guess, strong. There's definitely liquidity back in the market, but we're seeing very discerning dollars, if you will. Product that's been tried to introduce to the market that's B or less than fully leased has really had a tough time getting sold.
Well, I'm Bruce Duncan. I'm CEO of First Industrial. We've got about 74 million square feet of space around North America. And I guess I'm depressed sitting up here hearing what everyone's saying. It's much better than you've heard. Dr. Miller, bless him, the world is getting better. Think about it. If you look at the stock market, last year the Dow was up about 11%. The S&P was just under, up about 13%. The real estate index was up 25%. The stock market is a good predictor of what's going on and what's happening in real estate, and you can see it in, I'm also chairman of the board of Starwood Hotels. Business is coming back. You look at the hotel business, it's coming back very strongly.
The question is, will people shift towards ownership versus leasing? Leasing still provides what it was meant to be, which is flexibility, low capital commitment up front. And I think we're going to continue to see that. I think the only change we may see as it relates to ownership, the feeling from Duke, is on large corporate, single-tenant, long-term leases, that there may be a shift towards ownership in those asset classes.